Welcome back to Investing Talk podcast. Today, we're taking a focused look at Hudbay Minerals and their highly anticipated upcoming earnings report. Our goal here is really to break down the most crucial facts and insights from, all the available information. We want to arm you with a crystal clear picture of what to watch for, but without all the information overload. And hey, if you find this analysis helpful, please do remember to subscribe, like the show, and maybe leave a comment. Your suggestions for specific companies are always welcome in the comments too. We definitely look at those. Oh, and maybe consider buying us a coffee to support the show if you feel like it. Every bit helps. Okay, let's unpack what's shaping up for Hudbay Minerals' next earnings report.
Yeah, let's do it. So for everyone tracking Hudbay Minerals, the day you need is Wednesday, August 13th, 2025. That report is coming out before the market opens, and there's a conference call later that morning, 11:00 a.m. Eastern Time.
Okay, got it. August 13th, pre-market. What are the analysts expecting? What are the key numbers?
Right, the consensus numbers. Analysts are projecting revenue around $558.21 million. And for earnings per share, the EPS, they're looking for about 17 cents.
17 cents EPS, 558 million revenue. Okay.
Yeah, but what's interesting here is how the company's own confidence seems to line up, or maybe even sort of nudge beyond those numbers. There isn't an official whisper number reported, that quiet expectation from big investors. But given Hudbay's recent outperformance, it feels like the buy side might be thinking things could be modestly higher than that published consensus.
So maybe a bit of quiet optimism out there.
Could be. And the company itself, they've been pretty positive. After Q1, management reiterated their full-year 2025 guidance for production and costs. They mentioned copper production was right in line, which is good, steady. But even better, their gold production actually came in better than expected.
Oh, interesting. Gold outperformance.
Exactly. And they keep highlighting their cost discipline, saying they're confident about hitting their targets for the year. So it kind of raises this important question, right? How much of that Q1 momentum, that positive surprise, is going to carry through into this next report?
Yeah, that Q1 beat was pretty substantial. You mentioned their confidence, and I guess that Q1 performance really backs it up. Can you remind us about that Q1 surprise, and have they generally been meeting expectations?
Yeah, Q1 2025 was definitely notable. They reported an EPS of $0.24. That was against an estimate of just $0 in Old Man. So yeah, more than double. A significant beat.
Wow, okay. That's a big difference.
It is. And while we don't have super detailed numbers for every single one of the last 4 quarters from our sources, the general picture is that they've tended to meet or beat EPS estimates in most of those recent quarters.
Okay, so a decent track record lately. What about how the stock reacted after that big Q1 beat? Did it pop?
Well, the sources don't give the exact day after price move for Q1, but it's pretty clear those strong results, plus that confident guidance we talked about, it all likely played a big part in why the stock price has been relatively stable recently. It built some confidence.
Right, makes sense. And looking at their financial health overall, what are the key trends telling us?
The fundamentals look pretty solid, actually. Year over year, their quarterly revenue was up 13.3% in Q1 2025. That's decent growth. Their net margin was sitting at 7.48%, and return on equity ROE was 8.17%. Healthy numbers.
Okay, respectable metrics there.
And here's the kicker. Last quarter, they hit record-adjusted EBITDA.
Record EBITDA, wow.
Yeah, earnings before interest, taxes, depreciation, and amortization. It's a core measure of how the business is running. And they also achieved record low cash costs.
Record low costs and record EBITDA, that's quite the combination.
It really is.
Yeah.
It suggests they're not just benefiting from prices, but they're also running the operations really efficiently. For you, as someone watching the stock, that combination could mean they're more resilient if commodity prices fluctuate, and it maybe sets a higher floor for their future profits.
Yeah, that cost discipline sounds key. Investors must be watching that closely.
Absolutely. The focus has definitely been on that margin expansion and their growth plans. And Q1 really showed they could deliver on that.
So those internal successes are clear. But how do they fit into the bigger picture? What's been happening around the company and in the market recently?
Right, context is everything. There were some pretty significant developments for Hudbay during the last quarter, besides just the numbers. We already mentioned that continued gold outperformance from Q1, that's one piece. Then they completed the consolidation of their Copper Mountain ownership.
Ah, yes, the Copper Mountain deal.
Yeah, that's strategically important. It really boosts their exposure to high-quality copper assets. Good timing, given the focus on copper. And probably the biggest news, arguably, was getting the full permits for Copper World.
Copper World permitting. That's huge for their long-term growth, right?
Exactly. It basically clears the path for major long-term production growth from that project. It's a big de-risking event and signals future output. So you can kind of see how these specific company wins, like Copper World getting the green light, combine that with the broader market backdrop for copper and gold. It creates a very specific set of expectations heading into this report.
And what is that broader market backdrop? What are the tailwinds and headwinds?
Well, on the plus side, the copper and gold markets have seen, let's say, moderate price support through 2025. That generally fuels optimism across the whole mining sector, so it's a nice tailwind for Hudbay. But, you always have to acknowledge the flip side. There's still that macroeconomic uncertainty hanging over things.
Like interest rates, China.
Precisely. The interest rate environment, worries about global growth, especially China's demand. Those are ongoing potential headwinds for commodities. Operationally, things seem steady. They reported stable mill throughput in Peru and Manitoba, and they're apparently still working on optimizing things over in British Columbia.
Okay. And what about the analysts? Have they been changing their tune recently? Any upgrades or downgrades?
Not really any major rating changes, no big upgrades or downgrades popping up lately. But what we have seen is that the consensus estimates for both EPS and revenue have kind of edged slightly higher.
Ah, so analysts are reacting positively to the recent performance.
Seems like it. It looks like a direct response to Hudbay's strong execution, especially compared to last year. And looking ahead, analysts are now projecting a full-year EPS of $1 for 2025. And that shows a fair bit of confidence that the profitability they showed recently can be sustained through the year.
$1 EPS for the full year. Okay, so putting that together with the recent news. Now, how does the stock chart look going into earnings? What's the technical setup?
All right, let's look at the price action. As of the close on August 6th, the stock was at $9.20. It was down just a tiny bit that day, like 0.49%. But the interesting part is how it's been trading leading up to this report. It's been stuck in a pretty tight range.
No big run-up, no major sell-off.
Exactly. No strong pre-earnings momentum either way. That usually suggests a kind of neutral sentiment among traders. It feels like the market is waiting for the actual numbers, not making big bets beforehand.
Okay, so neutral sentiment. What are the key price levels folks should watch? Support and resistance.
Good question. For support, where the price might find buying interest if it drops, you'd look around the $8.80 to $9 area. Those are the recent lows where the stock consolidated. It's kind of a floor for now. On the upside, for resistance, where selling pressure might emerge, you're looking roughly at $9.65 up to maybe $10.
$9.65 to $10. Okay, those are the recent swing highs.
Yep, exactly. So those are really the key zones traders will be watching for a potential breakout above resistance or a breakdown below support after the earnings hit.
And what about volatility? Does the options market expect a big move?
Our sources don't give the exact implied move from options pricing right now. But historically, looking at past earnings reports for Hudbay, the typical move tends to be somewhere in the range of plus or minus 7% to 10%.
7 to 10% move. Either way, that's fairly significant.
It is. It reflects the general volatility you see in the mining sector and how Hudbay itself has reacted in the past. It's almost like the calm before a potential storm, or maybe just a steady breeze we don't know yet.
Huh. Yeah, the market's holding its breath. That lack of clear bias really makes this report pivotal, doesn't it? It feels like it could set the tone.
Absolutely. Which leads us right into thinking about the potential scenarios. What could happen? So the bullish case. What would a positive surprise look like? Well, obviously, you'd need Hudbay to significantly beat that consensus EPS of $0.70 and revenue of $558 million.
Beat on both top and bottom line.
Right. And that could happen if, say, gold or copper prices they realized were stronger than expected. Or maybe they managed even further cost reductions, or their production volumes came in above their own guidance again.
Okay, so better prices, lower costs, or more production.
Any of those, or a combination. Also look for guidance. If they raise their full-year guidance for 2025, or if they announce some other positive news, like maybe saying Copper World is moving ahead faster than planned, or talking about smart capital allocation, all of that would be very bullish. And definitely listen for strong commentary about future margin expansion. That's key.
Got it. So that's the upside case. What about the downside? What triggers a bearish reaction?
The bearish case is kind of the mirror image, an EPS or revenue miss. Maybe they had some operational hiccups during the quarter or unexpected costs popped up that hit their profits. A big red flag would be a downward revision to their full year 2025 guidance.
Cutting guidance is never good.
Never. Especially if it's because of weaker commodity prices or maybe some kind of delay at Copper World or any other negative operational surprise. Also, if the commentary raises concerns about margins getting squeezed or if cash flow generation disappoints, that would definitely hit the stock.
Okay, clear scenarios. Now, if you had to pick one single metric for listeners to really zero in on when the report comes out, what would it be?
Hmm. The single most important one. Given their recent story, I'd have to point to operating cash flow per pound of copper equivalent.
Operating cash flow per pound of copper equivalent. Why that one specifically?
Because, as we discussed, that combination of margin and cost discipline has really been what set Hudbay apart recently. This metric directly reflects that. It captures both their revenue generation from copper and equivalents like gold, and their efficiency in producing it. How well they maintain or ideally improve this number will tell you a lot about whether that operational excellence is continuing. It's a core profitability driver for them.
That makes a lot of sense. Okay, so keep a close eye on that operating cash flow metric. It seems like the linchpin. So pulling all this together then, what's the overall leaning? Bullish, bearish, neutral?
Taking everything into account, I'd classify the sentiment leaning as, let's say, neutral to cautiously bullish.
Neutral to cautiously bullish. Okay. Why the caution?
Well, if we put it on like a confidence scale, maybe 1 to 10, I'd say around a 6. The reason is management's execution has been really strong lately, and those recent earnings beats definitely provide a positive tilt. They've shown they can deliver. But you can't ignore the broader commodity cycle, which always has uncertainty. And that tight price action we saw in the stock, it shows the market isn't fully convinced yet, limiting that really high conviction you might see sometimes.
Okay, a 6 out of 10 confidence, neutral to cautiously bullish. So given that, what are some strategic considerations for listeners? How might they approach this?
Right, strategy depends a lot on your own risk tolerance, of course. If you're more risk averse, generally prefer caution. Probably the advice is to avoid holding the stock through the actual earnings release volatility. Instead, maybe you watch the reaction. If the volatility creates a dip, maybe an opportunity opens up near those support levels we talked about, around $8 and $89.
So wait and see. Potentially buy on weakness if the story holds up?
Exactly. Now, if you're more risk tolerant, comfortable with bigger swings, you could consider an option strategy like a straddle or a strangle before earnings. The idea there is to profit if the stock makes a big move, bigger than that typical 7–10% range, regardless of direction.
Playing the volatility itself.
Yeah, but that's definitely higher risk. If you think about doing that, seriously consider using only a partial position size to manage that risk. Don't bet the farm. And finally, for the longer-term investors out there, people who are primarily interested in copper exposure over time.
Right, the buy and hold crowd.
For them, this earnings report is just one data point. They might view any post-earnings weakness as a chance to accumulate more shares. But big caveat that's contingent on the earnings report not revealing anything that fundamentally damages Hudbay's long-term guidance or outlook. No major bad news.
Makes sense. Different strokes for different folks, depending on time frame and risk appetite. So whether you're watching for a short-term trade or investing for the long haul, hopefully this analysis gives you a solid framework for what to look for in this report.
Exactly. And maybe just one final thought for you to chew on as you wait for the numbers. Think about Hudbay's intense focus on cost discipline and these big growth projects like Copper World. If they keep nailing that execution, what does that really mean for their competitive advantage, especially if the overall commodity markets stay a bit choppy or uncertain? How much could projects like Copper World really shift the whole story for them in the coming quarters and years, maybe even making this specific report less critical in the grand scheme? Something to consider.
That's a really interesting point. Focusing on the long game versus the quarterly print. Great food for thought. Okay, well, we hope this has given everyone listening a much clearer picture of what's ahead for Hudbay Minerals. Thank you so much for joining us for this analysis today. And please remember to subscribe, rate the show, and leave us those comments. Tell us which companies you want us to look into next. And again, if you feel like supporting what we do, buying us a coffee is always appreciated. The link is usually in the show notes. Until next time, keep learning and keep digging for those insights.